The girls are off to some special event, so let's see what that looks like. How about some noise, kids? Bye! Anyway, the girls had fun, they had a great night, and I'm very happy for them. On another note, I was just in London for a couple days, and I was gonna have all this great footage for you, my client meetings and all that stuff, but my camera broke, and somehow my phone didn't want to cooperate either. I have no footage for you. What we did, however, is we released my new B2 reversal indicator, which is now officially available for Thinkorswim, for eSignal, for TradeStation, and also very soon for NinjaTrader. So we've now entered the month of October, which historically tends to be somewhat volatile, at least for part of the month. And I want to go through a couple of things with you guys here today to get you ready for this month of October from a trading perspective. So the number one thing I want to discuss here as far as October goes is a little thing called seasonality, specifically seasonality for stocks as represented by the S&P 500. So very simply, and this obviously is not an exact science here, but roughly what it looks like seasonally if we have our price axis here and our time axis here, then roughly speaking what we tend to see for the S&P 500 any given year, and again, just to reiterate, this is not an exact, but roughly speaking, we tend to see a rising market through the end of the sort of springtime. Then we see some sort of pullback. Then we see either a bit of a rally or kind of flat-ish throughout the summer. And then at some point, usually in October, so if this here were October, at some point, whether it's early October, mid-October, or late October, we tend to see some sort of a dip. And that's really what I want to discuss. What we tend to see after that dip, or after this volatility, is a year-end rally. The timing of this year-end rally is usually very difficult to predict. Sometimes it starts in November, sometimes it starts end of October, sometimes it starts at some point in December. But what's very high probability is this part here, okay? This entire pullback or this volatility that takes place at some point in October. It's not necessarily the first part of October or the end part, it's at some point in October. So from my perspective, it doesn't mean the market has to fall apart, but I think what one has to do here is be prepared for an increase in volatility. The way we do that is positioning. There's various ways of doing that. Maybe reduce some long positions, buy some puts in the S&P 500, which I think is a thing to do both from a hedging or from a speculative perspective. So if we now take this seasonality chart that I just drew and we overlay it on the S&P 500, which I just did on this chart that you're looking at now, basically in blue, you can see that more or less it matches up. Now, of course, this year we had a bit of an unusual start to the year, which was a very sharp sell-off. But ultimately, then we recovered and we had a steady move higher, bit of a pullback in late spring or early summer, and more or less we've been meandering higher ever since. Now, if we look at this seasonality chart, then these blue lines more or less dictate what we see from a seasonal perspective. Again, doesn't mean this has to happen, but what I'm trying to tell you is that the odds over many, many years of statistics do favor this kind of a path. How deep this sell-off is going to be in October and then how sharply a potential recovery rally into year-end is, I don't know. But I know from a statistical perspective, the chances of a pretty good volatility spike, at least for maybe 1 to 2 weeks or so in October, tend to be pretty high. So that's really the number one thing I want to go through. So whatever you do from a portfolio perspective, whether you hedge your bets, whether you take some long positions off, all those things historically speaking are a pretty good thing to do in October before we then ultimately do resume higher and have a year-end rally. Quickly getting back to my B2 reversal indicator, which I talked about quickly in the beginning of today's vlog. Here, for example, is a buy signal that this indicator gave me last week in the XLE ETF, the energy sector ETF, and you can see we've continued to rally higher ever since. So a very, very powerful indicator. You'll hear much more about this in the next couple of weeks or so, but stay tuned for more. Hope you guys enjoyed today's vlog, and I'll see you in the next video.